Good morning, everybody. My name's Simon Taylor, and welcome to episode 84 of the FinTech Insider Breakfast Show. As you can probably see, David's not here today, and well, he won't be in all week because he's taking some well-deserved time off at last. So enjoy the time off. I know you're watching, David. I'll be hosting the breakfast shows all week in his place. In this show, we bring you the best and brightest from around fintech and banking every single weekday, straight to your homes, 8:30 a.m. BST, apart from on Wednesdays, when Sam Moore goes live at 3:30 British Summer Time. Both shows go live here on LinkedIn. Today, I am thrilled to be joined by the one and only Ross Laurie, who's co-founder and CEO of Visible Capital. On today's show, we're going to be talking about how Visible Capital are using open banking to streamline processes in the wealth management industry, and how Ross appears to be coming to us directly from heaven. The sun is shining on you, Ross. How are you doing?
Thanks for having me, Simon. It's I've actually, there's no sun up here in Scotland. It's just a big, massive light I've got. So thanks for having me on the show. But I have to say, I got all excited about, there we go, sun's gone. Got excited about when I found out I was on the breakfast show this morning, but I was a little bit disappointed to find out it was you, Simon, and not Louise Minchin.
Yeah, no, I mean, there's really good breakfast presenters in the world, and then there's a guy who drinks Pepsi Max. But Ross, nonetheless, hopefully we have a good conversation. For viewers who aren't familiar, could you tell us a little bit about you and Visible Capital, please?
Yeah, hi. So as Simon said, I'm Ross Laurie, from co-founders of Visible Capital. We're a business-to-business provider, I suppose, for mainly at the financial advice side of the market. And I've been working in financial services since the early 90s, where I was originally a COBOL developer with what was Scottish Equitable and is now Aegon. So I've been lucky enough to be around. Back then, it was all business process re-engineering. So I've been sort of doing that for a long time now.
That's a bit of a classic word there. COBOL, for the uninitiated. Remind everybody what COBOL is.
COBOL's the thing that still runs most of your pension plans.
Yes, it's the software engineering programming language from the 60s, I believe, but actually still well regarded and still very, very effective in many, many cases. So tell us more about Visible Capital. What do you do? Who are your customers?
So we're you mentioned before, we use an open banking. It's one of the many things we do. I suppose the easiest way to look at us is we're effectively trying to provide plumbing for within the wealth sector. You will have seen a lot of people in open banking looking at what I call the credit side of the balance sheet. So they'll be looking at affordability scores or personal finance tools, generally looking at help people manage day-to-day money, P&L money. And what we've done is taken the same technology and applied it to the wealth side of the balance sheet, in order that primarily, we've got a number of things we're doing, but to make it simple, that onboarding process where the advisor sort of has to ask you a bunch of questions. Part of it involves getting an understanding of your wealth and your capacity for loss and ability to invest. And that traditionally is, can you fill in this questionnaire, or can you bring in 3 months bank statements and I'll go and make an assessment? It's very time consuming for the customer and for the advisor. It's got inaccuracies in it. And even better than that, thanks to regulation called MiFID II, we now have a thing called ongoing suitability. So you have to do that when you first meet your customer and every 12 months. And what we're doing is using open banking and a bunch of other financial plumbing to really speed that up to seconds, get complete accuracy, complete compliance, and ultimately feed in data for many of the other exciting things we might do in finance, like AI for advice and things like that. But we're not doing that.
Crazy, isn't it? Just to stay a customer, you have to keep going through that pain that you had to go through to become a customer every 12 months. And yeah. I mean, you can imagine advisors losing customers over this process if they've not automated it. And there are so many questions to ask every single time. And speaking of questions, do remember, LinkedIn folks, if you're watching, do ask your questions and we'll make sure that Ross is answering any questions you have about the wealth space. Fountain of knowledge here, right from the COBOL days all the way through. But that sort of question space is kind of really, really painful. To automate that must really make a business case impact.
Yeah, well, that's precisely the point. I mean, the cost of doing the process that we're solving runs into hundreds of pounds, and it's cumbersome. And as I say, there's a lot of inaccuracy there. And as it turns out as well that there's a lot of research being done that shows that if you actually ask the customer to complete that for you, they'll do it better. They'll give you more accurate data. They're not going to get their date of birth wrong or their name or address, you know. So first of all, it does that. But second of all, as I say, it's just the speed and the compliance. We can pull down 12 months of data, pull it into 187 categories, 27 alone just on income. And then the more important thing is we feed that straight into the advisor's existing back office. So we're not asking you to do anything different to use our software. You can literally just switch it on. If you're using one of the major back office platforms or even smaller ones, you know, your IntelliFlows, IRS, CashCalc, we're integrated straight into that. And we use Origo's Unipass system as well for secure mail, because obviously it's a closed system. Once you get your invite from your advisor, the data is going back to your advisor. So we need to ensure that that advisor is a bona fide good player in the system.
And I guess right now, with social distancing, there's probably never been a more important time to be truly digital. How have you found that the advisor space and the wealth space has really coped with having to give up the paper and having to give up the face-to-face interaction?
Well, it's still early days, and of course that was a barrier to entry, believe it or not, for what we're doing. You know, the fact that we can improve a process is one thing, but you've got compliance and regulation to worry about. And one of the arguments could be, well, look, we like what you're doing, but we'll just stick with the paper process because it's compliant. I think what we're going to see post-COVID is an acceleration of compliance adoption to digital, as well as, you know, organizational adoption to digital. People have said this before, but COVID-19 has been a bit of a time machine for technology, hasn't it? It's made a lot of things happen quicker than that. You know, stuff that'll happen in the next month that probably wouldn't have happened this year as a result. So it's not been a bad time to be building digital advisor tools when the last thing we want to be touching is paper COVID time bombs.
Wow. Okay, that's one way to think about it for sure. And I guess those bits of paper are comfortable to people, though they're well understood by customer bases. People aren't necessarily familiar with open banking. How do you get people familiar with that? And obviously, yes, it maybe solves that administrative overhead, but isn't there a risk that you just turn the customer into the advisor? Like, what role does the advisor start to play?
So yeah, I mean, you're right. Our end customer is not the end user. It's not my mum who's planning for retirement. It would go through the advisor. So we're only providing those data streams for the advisor to continue to do their job. So if it was going to take them several hours to gather that data before, they can have all that data before they see their customer and they can focus on the advice. In terms of the customer getting used to it, well, that's one of the challenges with open banking, isn't it? It's as I say, it's just part of what we do, but it's an important part because it gives us access to that P&L data, and it's accurate. But you know, you must have discussed this before. It wasn't asked for by the customer, and having worked in finance all this time, the general rule is if the customer asks for something, you give them it, and they'll use it. If they don't ask for it, you have to tell them why they want it. And the challenge we've had with open banking is the incumbent players didn't really want the customers to be using this technology. So there's not been much promotion of it. Hence why we've gone for the B2B option of solving an existing process. We're not really having to educate the customer too much, other than the existing process was manual, cumbersome, time consuming and costly, or you can click this button and permission your advisor access to some categorized data. So
it's interesting that incumbents seem to manage an upgrade to the existing process as a mental leap better than here's this new way of doing things. And the new way of doing things tends to be great marketing, but from a P&L perspective or from a cannibalization perspective, positioned differently, it can feel quite different. That's an interesting observation. I guess I'm interested in the kind of onboarding process and what that means for the wealth advisor under MiFID II. Talk to me, like, let's go down a level about how that process really translates and what it looks like day to day. How many of these things are they doing on a monthly, annual basis for a given advisor? And what does 3-4 hours back in their day really look like for them? And what's it going to mean for their ability to sell more, do more, you know, not just in a COVID world?
Right, what was the first question?
Yeah.
Sorry, Robert Preston.
Yeah, so yeah, I do ask double-barreled questions, but I was thinking out loud as I did it. The question really is the difference it makes to advisors to have this process. I was double-clicking on the business case. So yes, it's reducing hours, but if I've got one customer, reducing 3 hours to 30 seconds isn't that great. So how many times am I having to do this? And what am I doing instead of doing these onboarding processes that might be making a difference to me?
Yeah, right. So first of all, we're, as I say, our customer is the advisor, and there's about 4.5, 5 million UK customers that use advisors at the moment, somewhere between 1 in 8 and 1 in 10 customers. Now, let's just skip back. Back in the late noughties, we had the retail distribution review, which basically changed the way advisors effectively got paid, I suppose. They used to get a referral fee for passing on a mortgage or a pension provider. Nowadays, they have to charge for it. So RDR came along in the late noughties, and it basically it had a big effect on the advisor market because it reduced the number of advisors that were in there because less people, well, customers went from getting free advice to having to pay for it. So that had a bit of an impact. Similarly, I don't think that a lot of people move to online advice, and I think RDR slightly missed a trick because you go to a comparison site and see what the best pension provider is and accept that, but you as a customer don't know that they've paid someone £400 to be top of that table. So there's a little bit of an imbalance there that we need to sort of address going forward. So we're looking at about 1 in 10 UK customers, 4.5 million people a year. The process itself, well, as you can imagine. Play it out. So Simon, can you bring in 3 months bank statements, right? That's our first conversation. So then we meet up. You bring in 3 months bank statements. I've now got to try and process those things before I can then give you advice. So you think about the time that's been saved just in that. The customer hates it. We look at robo advice going forward, which, that's a whole different debate. But if you're looking to sign up for a, £50 a month ISA, and you're being asked to fill out, 3 months worth of paperwork and spend probably the best part of 40 minutes filling in questionnaires, you probably think, is it worth it? So, you might drop off at that point. So that's within the robo market. Our market of advisors, we're just looking to get the data into them so that they can give advice on their first meeting with a customer rather than spend time collecting data. And of course, there's a huge cost in that,
There's something interesting about the advisor's role has changed from, hey, it's this free benefit and the cost was hidden, but it felt free, to you've got to pay for it. So customers are looking at them very differently. And advisors become, really, there's a pressure on them to be more commoditized and to prove that their fee is worthwhile. And the more efficient they are, the more cost effective they are, the more they can compete. And actually, by giving them those tools, they can win more of the business in a market that's fundamentally changed. I think that's a really powerful point. And I think you've kind of hit something there in that kind of change that goes back to the regulation. And regulation can be such a powerful force for change. But I think so can a lot of things in the market, and that whole wealth space is really interesting because the power of advice and the relationship with the advisor can grow over time, but their ability to differentiate that maybe goes away if they lose that first transaction, or if they're creating those little bits of friction. So how do the advisors can differentiate in this new market? Yes, one, by taking away the friction, but what else are you seeing as good practices that are out there in the market?
Well, what we're seeing with the testing we're doing with the advisors at the moment is it's not just the fact that, as I say, we just set up to provide the plumbing. We don't want to do the advisor's job for them. But one of the things we're seeing when we start passing the data through is, well, one, they're very happy that they can see so much more data and get it a lot quicker. And it's straight in their back office. So they're already able to manipulate it within the systems they're used to using. But what we're seeing is comments around, I didn't appreciate he had that type of insurance cover. That's the wrong cover. You should be on a critical illness plan or whatever it might be. We're also seeing when people are planning for retirement, that they might be looking to try and save a little bit more money. And of course, by being able to give the advisor that full list of where the money is spent, they can then give them advice on, did you know that you could be saving money on this policy versus another one? And one of the sort of other interesting things, I suppose it's really interesting once you start looking at data, isn't it? And one of the things we've seen is, let's just say you're planning for retirement and you want to be saving an extra £100 a month, just, direct debit. The advisor can then using our data, look across that 12 months and see where the customers flush. Maybe they've got a little bit more money in August or September than they have in December. And they can dynamically take out the funds when the customer's got them. So maybe only take out £50 in December, but 150 in July. So we're allowing them to do a lot more, well, not just more advice for the customer, but more beneficial transactions for the customer as well.
It's interesting. I don't know if you've seen Snoop.app and Plum and a lot of the sort of the PFM apps that are out there at the moment. They're sort of doing that in mass retail, which is when are you a bit more flush? When can you afford to save a little bit more, and building that savings habit? But when dealing with the terms and conditions in an insurance contract, that's fundamentally different. Like, what this person needs contextually based on where they are in their life is a very hard question for simple algorithms to be able to answer. So to have a person be able to answer that and to give them the data can make a huge difference.
That's it. And what we're building out is more and more data points so we can understand that. So we've talked about open banking. We can pull in credit files so we can understand what terms are on mortgages, for example. So you can what's coming up and when, what's going on. Are we still on? Yeah, we're still. Sorry, Simon. Sorry, I lost my train of thought there. It went dark. So yeah, there's. I've lost the train of thought on that, but there's a number of things they can do once they've got the data in. But sorry, that's what we're saying. Other things we're adding on. So we've got. We're looking to pull in sort of pension data using Origo's integration hub. So that'll hopefully get us ahead of the curve on the pensions dashboard. Which conversely to open banking, I mentioned before at the start of this that open banking wasn't asked for by the customer. It was a sort of government decision, I suppose, a big government decision. On the flip side, pensions dashboards had 200,000 signatures to get going. So you've got a brilliant use case there with customers saying, well, we want access to all our financial data. We don't know how long that will take. There's a number of consultations on the go at the moment, which we're involved in, obviously. But in the meantime, if we can provide the advisor with that data, then at least we can get one step ahead of the curve.
It makes such a difference. I really love those examples that you were sort of giving there. I think it really brings it to life what the power of good data that's already there with APIs that are already there, but packaged and plumbed into your back office can make such a difference. But the advisor's got a new set of competitors as well. I think I mentioned a few. Dan Feeney, who's watching along, asks, Ross, what do you think of the newfangled DIY investment apps like Robinhood, eToro, maybe Free Trade, and those sorts of things?
Do you know, I was a big fan of eToro. I met those guys when they first they did a pitch at Wired, I think it was in 2012, and I thought that I used it for a bit actually. I thought it was kind of cool. That's more actual, I suppose. It's maybe a slightly different market to what we're aiming at. But when we're talking about wealth, you don't have to be minted to be in the wealth sector. You know, if you've got a pension, then that's effectively you're falling into our bracket. If you're using an advisor, it's when you come into contact with us. I like a lot of those. I think generally people are just looking for a lot of people don't want the hassle or the risk themselves, and they'd rather pass it on to someone else. I think the advisor market will grow, as well as the robo-advisor market and all these other sort of social-led investment arms. But we're looking more here at sort of day-to-day funds as opposed to someone looking to try and, find the next unicorn and make a few bucks off it. But I do like some of those platforms. Hargreaves Lansdown is still good, though, you know?
Yeah, old school, from Cobalt to Hargreaves Lansdown. Who needs the newfangled stuff? But I guess there is something that you pointed out there that I find really interesting: the difference between how people view like the stocks and shares, the thing I'm playing with, versus actually this is the rest of my life. This is the pension. I'm close to retirement. What do I do with my property? Different set of questions for different people.
Well, it is, and I suppose that is one of the big changes we're likely to see, isn't it? With open finance creeping in, I suppose everyone gets worried about, well, are all the pension pots going to get shared around a bit more? Am I going to lose value from my fund? And maybe I'm not sure that's the right question. I think, especially when you look at a younger generation, younger than me, sub 40, we were all sort of trained to look to life savings, pensions. But I think the younger generation now looks at life savings, So my first car, my first house, my first marriage, first kid, and then retirement, right? That's your 5 main things. And I do wonder about, people need to understand where the money is in order they can work out whether they're getting the best bang for the buck. If you're very young, mid-20s, you've maybe got 10 grand in a pension pot, you're not going to be attracted to an advisor because they're not going to make that much money out of advising you on 10 grand. But that person still does need advice. And I think what we will see is sort of more people moving into that space to help them manage their, where their money is actually. Because there's benefits for lots of people in that ecosystem. If you're a young person, you can probably afford to take more risks. And of course, if you're taking more risks, then your pension provider makes more basis points on the fund they've set up for you. So there's a sort of You talked about regulation there earlier on, and I'm sure we've talked about this before, Simon, in our crypto worlds. But you've almost got sort of three pillars of any successful sort of ecosystem in technology. You've got the technology, you've got the regulation, and you've got the organization. The technology is the easy bit, right? Regulation usually keeps up, and organizationally, that's the bit that usually lags. Well, thanks to COVID, those other two, regulation and organization, are speeding up the way that they're adopting technology. So we'll see. I would hope over the next year a lot of things change, but of course what we've had so far is enforced change, and what we want to see going forward is which of those changes are adopted and what plays out longer term.
I love your customer generation approach there. And in fact, Lucy Heavens actually asks the question, do you think there's a difference in adoption according to those generation? So a younger generation is more open to the open banking specifically, but are they more open to taking a punt? Are they more taking risk? And do those younger generations need more help than they're getting currently? And that's the space that the plums and the snoops could follow a customer all the way through versus the advisor that picks somebody up at 35.
Well, yeah, I mean, I'm a big fan of all finance advice. You know, if you've got an expert there helping you understand what you should do, then I'd advise taking it. And of course, the cost of using an advisor should be saved or recouped at least in the money you make back longer term.
I think there is a small difference though, because it's the whole advice guidance thing, isn't there? If you look at what Snoop and Plum are doing, it's not technically advice, it's guidance and good practice and best practices. But there was potentially a huge gap at that bottom end of the market. As you know, the way compounding works, the more money you're saving when you're very, very young, the better retirement you have. And it's such an outsized difference. The first time somebody showed me on a chart the difference saving in your 20s makes versus not starting until your 30s.
Yeah,
I was blown away by the difference it makes for the average person, and that's
it's insane.
not known about.
Well, it's funny that do you know? I remember when I was 16, working in a stacking shelves in a shop in Corstorphine where I grew up, and a guy coming in from the Pru and saying, you know, have you got a pension? When I was 16. And I inadvertently set one up back then. I think it was the Pru. Back then, you had a guy from the Pru. That was how it worked. So, you know, and maybe that was a symptom of growing up in Edinburgh, where everything's either finance, technology, or a doctor or law. So, you know, I've had that from early days. I'm very surprised, actually, that there's not more education around these types of things, even at a school level. You know, I mean, there's the new, what's the MAPS financial wellbeing plan for 2020 to 2030. And there's a number of issues addressed in that, including sort of a nation of savers and getting people started early. So I think we're looking at the bigger picture, and I think some of these tools will help. I would always fall on the side of an advisor, largely because, as I said at the start of this, I still think a lot of the digital stuff isn't as regulated as the advisor stuff, and that playing field needs to be leveled out. But yeah, I mean, you know, yes, in short, there are different attitudes to how we use technology, although that is again changing. And you know, my mum's Zooming me almost every day now, and she's in that generation of boomer where, you know, they're often talked about as, you know, well, they don't really use the internet. But remember, these people have been through decimalization. That's a lot harder than the internet.
Yeah, shout out to the boomers. If you can handle decimalization, then geez,
Right.
what can't you handle? There's a good question here from Ali Aloha. I hope I've said your name right, Ali. I apologize if not. She says, hello, Ross. Could you tell us about your data privacy policy? Is today this a priority for fintechs? And I guess, especially given what you do with open banking, it's got to be huge.
Yeah, I mean, absolutely, right? I mean, we've just recently got our ISO 27001 accreditation just last month. So we take it very seriously. Of course, we've got an AISP license from the FCA. That was another extremely detailed process. So we do take that all seriously. We're not storing customer data for any longer than we need to, because remember, we're not giving the customer advice. We're taking the data, cleaning it up, and passing it through to the advisor. So we're acutely aware of all those things. And again, I said at the start of this, we're using Unipass to even get that initial conversation going, because we don't want anyone able to use our system who can't be guaranteed to be a good actor within it. And Unipass gives us access. I think there's 55,000 UK advisors currently using that system. So yeah, security is paramount, and we really want to stay out of the loop as much as we can. We don't want to handle the customer data ourselves where we don't have to.
Quick question from Machine Rajavani there, Ravanji, sorry, Machine. At changehead.org.uk, we focus on poverty and homelessness alleviation. Who are the best advisors out there who you think we can partner with to help make a difference to that sector? And I guess it's putting you on the spot a little bit, so maybe that's a follow-up with Machine, but if you know anybody off the top of your head, do give them a shout out.
Yeah, I mean, I'm guessing Citizens Advice and people like that, or the Money Advice Service, whatever they're called. I mean, again, slightly different side of the balance sheet to the one that I'm working on. You guys at Castlight, I've got a solution on that with their affordability score. Castlight Financial, have a look at them.
Absolutely, great shout outs. I'm going to move us to, we've only got a couple of minutes left for this, and it's kind of one of my favorite subjects. What do you think's next for the industry? Where's wealth going? Where's advisory going? What are the big things you're getting? Is it younger generations? Is it intergenerational wealth? Where are we heading?
Intergenerational wealth, easy to say, is certainly one of the hot topics at the moment, certainly within the provider side of things. There's trillions of pounds of money expected to move from, well, effectively, it could jump 2 generations. So that is a big thing to play that will change. I think the general thing, there's a lot of talk of open finance, open pensions, open savings and investments. I think federated identity, to take us back to our old stomping ground, Simon, is probably going to be key to all of this. I don't think we're going to be able to actually give the customer ownership of all the data until they own all the data themselves. So there's a little bit of education around that. And again, COVID-19 might accelerate that, because there'll be other uses for federated identity, such as proven immunity. So we could see, I think once we've got that one version of the truth, financial services becomes a lot more about the consumer, and the consumer will get a lot more out of it. But we've got a little bit to figure out on that regulation and the organizational blockers that I mentioned in my triangle before.
And we have seen lots of countries. I mean, India is a well-known example with the Aadhaar system, but the Scandinavian regions, the Netherlands, and many other parts of Europe and the rest of the world have good working federated identity systems and national ID systems. They can make a real difference to everything that comes next. So that's going to be an area to watch. What about Visible Capital itself? What are you guys going to be focused on over the next 12 months? We saw you guys had a raise recently. I think you secured 500k in seed funding from TechStart and some private investors. So where are you guys going? How are you guys moving forward?
Well, COVID has been okay for us in terms of giving us a little bit more run rate, and we're getting through things a lot quicker. As I say, we're just looking to continue bolting bits and pieces onto that plumbing. So we've got open banking on already. We've integrated with Unipass. We're pulling in through the integration hub when it's available, which is now. There's a whole bunch of other processes that will come on that digitize that financial services process at the moment, which at the moment, it's just a digitized paper process. And what we're looking to do is just completely overhaul that, but not disruptively. I think the key to success in financial services is diplomacy, not disruption.
Oh, wow. And you talked to one of my favorite things there. Digitization is not digital, and a truly digital process is going to make such a difference for people. It's coming to the top of the hour, so that's all we've got time for, I'm afraid, everybody. It really does fly by, especially when you got Ross coming through us from the heavens, it seems, with the bright shining lights. Thank you so much for joining us. Ross, where can people find out more about what you and Visible Capital are up to?
visiblecapital.io, or go on the YouTube and type in Visible Capital, where you'll see our newest episode of VCTV with Anthony Rafferty from Oregon. Cartoonified.
I'm gonna take a look at that as well. Anybody doing video content, I'm all for. So thank you so much. That's all we have time for today. I think we'll need to get moving and checking that out. Tomorrow I will be joined by Janice Dunn and Steve Fruck from Horizon. And don't forget that Sam is back on Wednesday, every Wednesday at 3:30 British Summer Time or 10:30 Eastern Time if you're based in the East Coast. Do check out Sam's show. He has some unbelievable guests lined up. One of my favorite things every week is checking out who Sam's talking to. Have a great day, everybody, and I shall see you soon. Goodbye.
Cheers, folks.